at the stock for us in our overlooked segment this afternoon, George. This has been a rough one, and it seems like there's maybe some problems with their partnerships, right, with Microsoft. Tell me about it.
Well, that's the culprit for today's. I mean, decline in price, obviously by 30%, was the aspect of Microsoft sort of, going through their partnerships as in the ad tech space in terms of their search optimization tool Bing, and it looks like they've excluded, from what I understand here, Perion Networks from their partnership, or excluding from their for advertising publishing partnership, and that again is creating some big headwinds from the stock price action. It's down significantly today, and it's down. It's pretty remarkable. It's down over the last year about 73%. And with that said, it looks like the company did revise some preliminary guidance for both Q2's revenue and earnings, but also for the full year, fiscal year 2024. But I'm just going to skip to the fiscal year 24 numbers, but they moved the entire sales number from 600 million down to 500 million at the midpoint, and also their adjusted EBITDA to 550 million. Now, I went through their income statement in the last year. They generated, it looks like, about 105 million in adjusted EBITDA. So they're expecting about half of what they earned last year for this full year, 2024. But the stock is obviously reflecting some of the challenges they're having from the standpoint of their partnership in terms of their display advertising, but also their search advertising partnerships that they have with Microsoft.
Yeah, I mean, look, that's kind of the power of the size for Microsoft. And you've got a major client like that, key client risk, key man risk. Yep. And when cutting the outlook kind of brings it front and center, so all the analysts start slashing all their price targets, and next thing you know, it's a snowball. And Duran Gerstella used to be the CEO, left last year. And I mean, it kind of seemed like the timing too. I don't know if it's related, but he got out in time. Put it that way.
Well, look, I can't say what's going on, whether that happened in terms of the transition. But I will say this, one of the things I'm looking at, and this is where it's like kind of convoluted. One, the company has about 479 million in cash. Market cap right now is 600 million. So you look at that cash rate relative to market cap, it's extremely high as a percentage of total market cap. Now, the other thing is they're still profitable. They're expecting to come in with 50 million at the midpoint, even on an adjusted basis for this year, for 2024. And ideally speaking, obviously the earnings growth is decelerating. They're expecting 15% decline. It's probably going to adjust once the analysts revise their outlooks for earnings growth down further going forward. But, looking at the forward multiple, it's sitting in the mid-single digits. So, unless there's something else going on that I'm not seeing in the financials, obviously the market is picking up on something else. This may be an opportunity, but I'm not saying that's the case because I just don't have perfect information.
Yeah, fair enough. All right, so there is, a plan here, does it sound like, or is this just sort of hanging on by a thread now? Because, I mean, it's not like the digital advertising market is particularly booming, as it was, a couple of years ago. So when you get pricing cuts from Microsoft, it's like, boy, there's not, either you need to go hunt for another whale or maybe get picked up by another company or something.
Well, look, at the end of the day, obviously there's a lot of movement into value-orientated growth stocks. And I talked about First Solar. This is completely different earlier today on Fast Market, and they're just outpacing the rest of the solar space because they're profitable. So in this case, looking at digital ad companies, you got to go with best of breed. Obviously, the Trade Desk, Magnite is another one, Pubmatic. Those stocks have outperformed, obviously, Perion Networks. I think it really has to do with financial fundamentals and growth that's moving in the right direction for some of those other names. So I think that's also part and parcel what's happening here. This is a market where, again, if you're looking for growth, you're gonna support the valuable ones and the profitable ones versus not. And this one, like I said, is still profitable, but the challenge is that there's deceleration in both sales and earnings. And that ideally, in a nutshell, will cut your multiple down below 10. It's right around 6 or 7 times forward earnings. So they're still profitable based on this cut. But let's see what other analysts say, because they'll have some more insights into what's really going on. They'll be able to hone into some more details in terms of exposure to Bing as a percent of revenues and other features which I'm not aware of.
Okay, understood. Yeah, tough because already seemed like, according to the analysts, they've been losing market share, and now this is a major blow. Obviously, kind of like feels like a little bit of like a jugular on already a struggling ship.
Yeah.
So, all right.
Yeah. So last thing here, OJ, let me point out is if you look at the short interest in this name, it's actually very low at around 2.5%. So that's the kicker is that it's been moving like there's huge amount of short interest, but there's not. And so obviously there's something else going on.
Okay. Interesting. All right, George, good breakdown. Appreciate that.